If you are in any kind of financial situation, today's video will transform your view on where your funds will be in the future. We'll go into greater detail about how much this cryptocurrency space will grow. And I assure you, it will not be what you are anticipating. It's not like XRP will reach $10 or $100, but much more, as the entire crypto market will be infused with trillions of dollars. Raoul will discuss how much he believes the cryptocurrency will develop and what you should look out for to impact your financial future. And if you like this video and don't want to miss any future update from our channel, then subscribe to the channel and make sure to watch the video until the end.
The hedge funds have been my lifeblood. I speak their language, I live that world. Many of them are my friends. One of the reasons I also built a business around this called Exponential Age Asset Management is because I think hedge funds offer the great opportunity to capture the alpha in markets. You see, the crypto markets are going to go from, I think, $2 trillion where they are today to something like 100 trillion by maybe 2032. That's an enormous rise, and we won't capture it all by just focusing on Bitcoin, Solana, and Ethereum. We need to be able to move further out the risk curve, but that's bloody hard. It's not something I can do. This is what hedge funds are really good at. They do this. They spend all of their time looking for alpha, looking for opportunities. So I find speaking to hedge funds super rewarding because these guys have capital on the line. They not only have their own personal capital, they also have investor capital. So their job is to focus on the best opportunities in a risk-adjusted return basis. One of the things that, I too was class of 2013 with Bitcoin. One of the things that I saw in it immediately was the game changer in terms of both capital formation and kind of aggregation of interest of people is the behavioral economics side of this thing. Because, you bring people into a network and the token value goes up because of Metcalfe's law, increases the value of the network. And that allows you to bootstrap businesses really fast. And I still think that hasn't been fully yet understood by people in what that means. Yes, we see some perverse incentives now, airdrops or sort of ways of farming it. But I think the ICO thing was the start of something much bigger. I think firstly is now the market discounts them. So therefore you get a good shot in the liquid markets to make a decision. Because the decision I think you've got to make is the supply is known. So that's off the table. In typical markets, unknown supply, unknown demand, that's complicated. Known demand, not known supply, you can model something, and the reverse side. So I look at these and I know what the supply is going to be because we've now got the unlocks. The tokens have been discounted because low supply. And then what you know is, well, if demand does come, the beta of a low float is gigantic. And I think it's going to crush everybody's understanding of what low float means in this bull market, and they'll all be wrong. And they'll be wrong because limited float, but good demand, because some of these are really great projects, will create really asymmetric risk rewards. I don't think anybody understands this because they think future token unlocks always mean the price under pressure. Yeah, in a bear market, they'll probably go down more than others. But in a bull market phase, with a very small float, I think this is very interesting. And I guess they're all going to outperform.
I partially agree. I think what you're saying is true for a good number of high quality projects.
Yeah.
But I think we're going to
see... That's the caveat. These are ones that actually get demand because they build network effects and adoption, stuff like that. If they don't, then no, it's going to shit. The ones that win, the early stage ones that win this cycle of the quality projects, like Solana was last time or ETH was the time before, will all be low float. Maybe there's one that isn't, but it's just very hard to beat a low float because I've seen this in markets themselves, in traditional markets. You've got low float equity. You bring in one large buyer, it goes bananas. I just put it really simple terms. The space today is $2 trillion. I think it's going to $100 trillion. That's just extrapolation of market cap or the log regression channel of the price of Bitcoin. You can kind of back it out in a number of different ways. And maybe I'm an idiot wrong by 50%. It goes to 50 trillion by 2032, 2034, something like that. And so the job, therefore, is to ride that trend. It's not, because one thing that people don't understand is it will not be a $50 trillion Bitcoin world. Bitcoin might be 10 trillion. Well, there's going to be 40 or 90 trillion of value created somewhere else. And that's what hedge funds can do, because that's a hard job. You need to be super focused to think, where is the really big value accrual? Like you did with Solana. Classic example is you see something really early stage and the value accrual has been vast from that and it's not over. And that's what I think the bigger opportunity. People zoom out, stop worrying about the cycles as much and just think, how do I capture that trend? Because I think that is the largest, fastest accumulation of wealth in all human history if that plays out.
Absolutely, folks. As Raoul Pal emphasizes, we're on the cusp of a financial revolution in the crypto space. Hedge funds are poised to inject trillions of dollars into this market, and we're already witnessing the early stages of this massive influx. Let's break it down for you. Major investment firms are now regularly purchasing Bitcoin and Ethereum through ETFs. This isn't just a trend, it's a seismic shift in how traditional finance views cryptocurrencies. We're talking about billions of dollars flowing into these digital assets, and it's just the beginning. But here's where it gets really interesting. It's not just about Bitcoin and Ethereum. People are accumulating XRP at an unprecedented rate. Raoul Pal points out that we're entering a new era of market maturity in crypto. Gone are the days when any random altcoin could skyrocket for no reason. Now we're seeing a huge dispersion in returns based on asset quality. This means that high-quality projects with real-world applications and strong fundamentals are likely to outperform the market significantly. Here's the kicker. As you heard, Pal believes that the crypto market could grow from its current $2 trillion valuation to a staggering $100 trillion by the early 2030s. That's not a slip of tongue, folks. We're talking about a 50x increase in less than a decade. This growth won't just be driven by Bitcoin. It'll be fueled by a diverse range of cryptocurrencies and blockchain projects that solve real-world problems. So what does this mean for you? It means that right now, you have the opportunity to position yourself for potentially life-changing returns. But remember, it's not about chasing the latest meme coin or getting lucky with a pump and dump scheme. It's about identifying quality projects, understanding the technology, and thinking long-term. Now let's listen to Raoul Pal again, as he has more critical things to say again.
Our financial system is probably too small an expression for what we're building. But let's call it the future of the internet, the future of money and value and all of that, then it cannot be that the collateral of the system is the most valuable thing. It might be valuable in terms of you need it, but it can't be valued more than the system. If not, you don't have a system. You in fact probably have the apocalypse. And it's kind of, there's a health ratio here where you need, as you say, these productive assets to be worth significantly more than the collateral of a system. If not, just nothing works. So how do you, when you look at the space now, what is interesting to you from like a core holdings perspective, where your view is on ETH versus Solana and some of that, and then we'll get into what excites you for the future. But, if you're looking across the broad 3, 4, 5, 6 assets, however you want to measure it, what do you think, how should we think about those? Because narratives keep shifting, as you know. They're not necessarily accurate either.
So let's start with the ETH Sol question first, and then we'll get into some of the subsequent questions. I think that Solana is gradually flipping ETH on every metric that matters. We're seeing that this year, metric after metric. Total transaction fees, total, trading volume, active users, all of these things we're seeing flipping, maybe not, holding the number one position, but getting there, coming back and trading back and forth. Yet these assets are priced very differently. And I think Ethereum is in a really, really tough spot right now because in one direction, they're influenced by Bitcoin and they want to be like Bitcoin. They want to be this World War III proof, kind of maximally decentralized thing, but they're never going to be as decentralized as Bitcoin. It's just the laws of physics prohibit it, right? There's just more state in the system. The laws of physics literally prohibit it being as decentralized. And then on the other side, they want, like, Ethereum wants to support DeFi, and it wants to support payments, and it wants to support NFTs, and it wants to support all of these wonderful things that people want to build on these rails, but it can't compete with Solana on that side.
And that's all for today. If you enjoyed this video, please give it a like, subscribe to our channel, and hit the notification bell so you don't miss any future updates. Thanks for watching, and stay tuned for more.